You're still watching Business Incorporated. Moody's, in its latest banking system outlook, has maintained a negative outlook for the Nigerian banking system. Moody's also released a report last week saying African banks' credit quality and profits will deteriorate in the long term if their climate change and environmental risk are not addressed in their governance, risk management frameworks, and business strategies to maintain credit quality and profitability. Antonello Aquino, an Associate Managing Director at Moody's, joins us now to talk more about this. Hello, Antonello. Great to have you.
Hi, Ladi. Thanks for inviting me.
Thank you. Well, the outlook update for Moody's maintained a negative outlook for the Nigerian banking system. What factors influence this decision by Moody's, and what should the central bank and other banks be doing at this time?
Yes, we maintain a negative outlook for the Nigerian banking system. And the main reason is that we expect the bank's loan quality to deteriorate in 2021. And this is because the loan repayment holidays and other supporting measures implemented by the government and the central bank are going to unwound in 2021. So we expect that problem loans will increase to between 8 and 10% of total loans, for example, and they were 6% in 2020. And the fact is that the banks are exposed to large single name in terms of loans, as well as sectoral concentration. And so we expect, again, a deterioration of the loan portfolio in 2021. The other reason why we have a negative outlook is also the fact that we expect weakening capacity of the government of Nigeria to support the country's banks in case of need. And this is reflected in the negative outlook that we have on the government credit rating.
All right, Moody's also released a report on African banks saying their credit quality and profits will deteriorate in the long term if their climate change and environmental risk are not addressed in their governance. You mentioned some countries, Nigeria, South Africa, and DRC. What are the key issues with these countries, especially Nigeria and South Africa, which are the largest economies in Africa?
Yes, you're correct. I mean, we expect environmental factors to lead the deterioration in terms of the credit quality of the African banks in the long term. So if African banks do not take measures now to manage these climate-related risks. So what we have done, we rate around 50 banks across 14 countries in Africa. And what we have done a study of mapping their exposure to environmental risks. And we found out that African banks are exposed to environmental risk through two channels mainly. One is their lending portfolio that is particularly exposed to oil and gas and mining. And the second one is also through their outsized holding of government bonds. So when we look all in all for Africa banks, around 30% of their loan portfolios is to sectors that have moderate to very high risk exposure to climate change.
All right,
so you ask in terms of the banking systems more exposed, I think you're right. I mean, Nigeria and South Africa are the ones that tend to be more exposed to through climate change, given their lending exposure. So, for example, if we take Nigerian banks, they have substantial exposure to oil and gas borrowers. I guess this is not surprising, given the economy there. But we found out that 1/4 of their loan portfolio is exposed to oil and gas borrowers. So it's quite a heavy exposure for Nigerian banks.
Okay. Well, the report also says lending to environmentally sensitive sectors increases the bank's challenges, given these industries' high inherent exposure to carbon transition and physical climate risk. What sectors are particularly hit, and what is Moody's advising banks to do at this time?
So yes, and this is part of another study that actually we had done, we carried out last year. So we look across around 90 global sectors, and we have identified three sectors that are most exposed to climate change. So the first one is oil and gas. The second one is mining, and the third one is transportation. So clearly the exposure of these sectors to physical climate risk as well to transition to low carbon technology is going to be challenged. And clearly African economies are exposed to oil and gas and mining. And so in turn, also the banks in the continent are exposed to these, to these sectors, and so to the risk of climate change. When we look at Africa specifically, we also think that agriculture sector, there is quite a high risk to climate change. And that's because clearly there is a higher reliance on rain-fed agriculture in Africa. So clearly that is more exposed to the changing climate patterns, depending clearly on the rainy seasons. So what we have seen in terms of the African banks specifically is that they generally take longer, they've taken longer to embrace the climate change risks compared to peers in developed countries. But what we do see is that they are trying to disclose more. So particularly South African and Nigerian banks are leading the way on environmental risk disclosure, and also start adopting sustainable energy policies, for example. So I think for me, the most important step is to disclose the risk, to discuss these risks. And with the publication of our report last week, that's what we are trying to do as well.
Okay, Mr. Aquino, thank you so much for giving us your time on the program today. Antonella Aquino is Associate Managing Director at Moody's. Thank you for your time.
Thank you, Larry.